Good afternoon, everybody. Welcome to ActivTrades Monday Market Matters webinar for the 10th of February 2025. It's Paul here. I hope you're all well. I hope you've had a good weekend and you are enjoying this start to another eventful week in markets. Fabulous to have you here. Here we are today to talk about what asset class should I trade, and this is part of almost like a small kind of smaller little project in terms of just trying to help people at the start of their trading journey understand different asset classes and understand, how you can trade them, how they're available, and what options are available to you as a client of ActivTrades. As always, we just appreciate that for those of you joining us for the live session here, we're always keen to know that the technology is working in our favor. If you can just confirm in the chat box that you can hear my voice, that you can see the slides, that would be a great start for us. Fabulous. I can see that. Oh, thank you, Stuart. That's much appreciated. As always, we'll talk about what's on our agenda for our session today. We'll always do a little bit of intro to Monday Market Matters, in particular looking at the news and what is a rather busy and eventful week ahead for us. But, in terms of our main thrust of the education element, we'll be talking about, how does a trader understand what particular asset class to trade? Where should they focus? And what should a trader be aware of before making those choices? And I'm going to share with you, a couple of my own ideas, a couple of my own drivers. And as I said, we will look at a couple of different asset classes over future sessions as well. And of course, we're interested as well, how does a trader engage with these asset classes? What are the sort of things we need to be aware of? What are the sort of things that might help us in terms of looking at how we choose our asset classes? Then, as always, we will switch across to the live markets, having a look at the ActivTrades platforms to see how the markets are reacting to the sort of open of the US session. So, always plenty for us to talk about, always plenty for us to discuss. If you've got questions or comments or thoughts, by all means, you're very welcome to add them in the chat box. Where if it's within our time and our remit, I'll be very happy to sort of try and help you where possible. And also, it makes for an interesting conversation for us all. Okay, so Monday Market Matters is our regular webinar series with the aim to help traders start the week in the right frame as we prepare for the opening of the US markets in in about 25 minutes time. So every Monday, 2 o'clock London time, we look to cover the news. Okay, what are the major news and narratives that we want to be aware of for the week ahead? We'll do a main piece on education. As I said, today we'll talk about asset classes. As always, we'll have a look at the ActivTrades platforms and tools that are available to you as a client of ActivTrades. And then we always finish with a switch to look at the live markets at the start of the US session. So always plenty for us to cover, always plenty for us to discuss. We're never short of either topics to talk about or particular newsworthy elements that we can discuss. Certainly, even more so in the last couple of weeks with the change of administration in the US, but we're going to look at that in a moment anyway. So great for you to all be here, whether you're watching this live with us or whether you're watching this on the ActivTrades YouTube channel. You're all very welcome. It's great to have you here. We always appreciate that we have a broad range of experience of people joining us, from those of you who are right at the start of your trading journey to those of you who have been trading for many years and you're experienced. You're all very welcome here. There's always something for everybody to take away, regardless of your background or experience. We also truly understand as well that even though these are the English desk, sort of sponsored webinars, we recognise that we have quite often a global audience who join us. It's great to have you all here. Okay, you're very welcome with us here for our sessions. So, as always, we have a little look at the start of the week, looking at the kind of the news that we can expect coming for the week ahead. Those of you who've joined us, on a regular basis will know that, I talk about if you're at the start of your trading journey, I don't expect you to be able to necessarily analyze the economic data, but it is unbelievably important to know when that economic data is coming out, because invariably when that news comes out, that can bring volatility into markets. And volatility is a double-edged sword. Okay, when you're on the right side of it, it makes your trading session, enjoyable. When you're on the wrong side of it, it can make your trading session challenging. So it's in your best interest to know when that data is being released, and you can find that out on an economic calendar. There is an economic calendar there on the ActivTrades website that you can access, and there are others on the internet. So there is no excuse not to sort of know when the major economic data is being released for that week ahead. And we had last week was a very busy week. We had the start of the month. We had big news like the non-farm payrolls. We also had the overhang from the sort of tariff trade wars that were kind of begun by Mr. Trump last weekend. And so we had a very busy and eventful last week, and of course this week is already looking like being a repeat of that. So invariably over the weekend we had Mr. Trump making some particular comments about sort of immediate tariffs, in particular on steel and aluminium, as we might say here. Okay, their imports into the US. And of course, that is having an impact on markets already, which we will look at when we switch to the live markets and charts in a moment. But today, Monday, is a quiet day in terms of the economic calendar. But what we do have interest in terms of newsworthy data and also pieces that are of relevant and interest to us, let's say here in the UK, Western Europe, is tomorrow we've got Mr. Bailey speaking. Okay, most people were listening to his press conference last week after the Bank of England MPC meeting and sort of listening to his rather guarded comments. I suppose that's the most optimistic spin I could put on his comments about the UK economy, and of course that has a knock-on impact to sterling and to the FTSE. But he is speaking once again tomorrow. We also have Mr. Powell, Chairman of the Federal Reserve. He's speaking twice this week. Okay, speaking tomorrow afternoon for those of us here in the in UK and Europe. But I suppose the kind of the sort of, I'd say the high point of news this week will be the American CPI, their inflation numbers once again on Wednesday morning in the US, Wednesday afternoon for us here. But also once again, Mr. Powell is testifying tomorrow as well. Thursday, we have some Kiwi inflation expectations, so they'll be coming out overnight for those of us here in the UK and Europe. Then first thing we have UK GDP, and Mr. Bailey in his comments last week sort of alluded to sort of the elements of GDP as part of his broad brush over the entire UK economy. But we also have Swiss inflation numbers, and we also have PPI in the US. So we've got CPI on Wednesday, PPI and unemployment claims on Thursday. And then on Friday, we've got retail sales in the US. Naturally, people are going to be interested in these numbers, the US, like ourselves, as a consumer economy, and invariably people will be interested to see, how confident, how resilient is the UK, or rather the US consumer, and what sort of economy is Mr. Trump inheriting. So we have, as I said, a fair bit of data on the economic calendar. There are also quite a few earnings releases this week for some of the sort of big companies as well. So things like Cisco or McDonald's today. So they will also have their own impact. And then, of course, as I said, we had Mr. Trump's comments over the weekend, and then invariably there will be counter offers and offers, etc., as these work their way out over the next 24 to 48 hours, all of which will have an impact on markets like we saw last week. So plenty going on, plenty to sort of keep us engaged. But as I always say, it's important to know when this news flow is, how this news flow is originating, where it's coming, giving an idea to give you, make sure that you're in top of your risk management and also on top of understanding the order flow as we see markets reaction. So as always, plenty for us to talk about, plenty for us to discuss, and we will have a little look at live markets in a short while to go through that further. So having looked at that, let us take a look at our kind of main educational piece for today. And as I said, it's about what asset class should I trade. I recognize that people who are at the start of their journey might sort of, just maybe a little bit overwhelmed, or perhaps they're a little bit confused or intimidated about which asset class or which instrument should they be focusing on. Sometimes people make the decisions based upon who maybe their friends are trading with, or the advert they've seen on, on the internet, okay, or a particular YouTube piece they've seen, or, our sessions here. So what we're going to look at over a few sessions, just to understand, help people understand, what are the kind of asset classes that we should trade, and what are the asset classes that are available to us as clients of ActivTrades. And, as we'll go deeper into it in future sessions, how can we make the best of those asset classes? So as the slide says, there are times when new traders are left wondering whether they're trading the correct instruments. They may be sort of trading, foreign exchange markets, and all the kind of the momentum and energy and moves appear to be in the stock market or the equity indexes, or they might be trading crypto, but all the moves are happening in the FX market. So this can lead to confusion, and also can lead to, inexperienced traders making impulsive, knee-jerk decisions to maybe chase a moving market. But the reality is that, from my own experiences, that's a move that rarely ends well. So what we're going to look at today, as I said, over a series of sessions, we will look into asset classes, what they offer, what are their pros, what are their cons. Today, we'll just take a little look at FX and stock markets in order to help give you some insight into which ones, you should be looking to trade, or which ones you might look to focus. Now, I appreciate, if you're an experienced trader like myself, you might trade across many asset classes. But equally, if you're at the start of your journey, it might be you're just looking to focus on what might be one asset class, might actually even be one or just two instruments. Everybody has their own different way of engaging with markets, and part of it is a case of refining your approach based upon the feedback, the feedback loops that you create for you in your own trading performance. But we're going to talk a little bit about both forex and stock markets, and also a little bit about seasonality as well. It would be interesting to know from those of you joining us here in the live session at the moment today, are there any particular asset classes that you prefer or that you focus on? Do you focus on just one asset class, or do you find yourself trading across a multitude of instruments and asset classes? It would be interesting to know. Just I'm always curious to see how people are engaging in markets. There's always something that we can all learn. There's always something that it's fascinating to see how we are all engaged in this great endeavor of trading financial markets. So, as I said, there are times of the year where you might particularly choose to focus on one asset class over the others. So, maybe periods where you might trade on FX, or periods you might trade on stocks or equity indexes. And we'll talk more about that a little bit later on in our session. I found from my experience that sometimes it's very clear which particular asset class has the energy and momentum behind it. Okay, so there may be periods where, let's say, the kind of Mag 7 US tech stocks take all of the energy and the enthusiasm and momentum. Other times it might be commodities. Other times it could be fixed income. Other times it could be FX, based upon what's going on in the world. As I said, sometimes it will be clear. Other times, not so much. Now, of course, admittedly, it does depend a little bit on your experience as a trader. What I always suggest is that newer traders are kind of better to focus on one area as they learn their trade, as they hone their particular craft. Now, to give us a little bit of, let's say, a little bit of context, a little bit of background, let's talk a little bit about how we've seen markets develop over the last 10 to 15 years, and actually how that has played itself out in the way we look to operate ourselves, okay, as private retail traders. So Paul says, I've just started on the DAX. Okay, so one instrument in one asset. That's great. Paul Stewart says mainly the Nasdaq and always around the US Open. Okay, so fabulous. Thank you for that, Stuart. We'll be looking at the Nasdaq and how it's opened today after Mr. Trump's comments of the weekend a little bit later on. But we appreciate you being here. So thank you, ladies and gentlemen, for your comments and your insights. So, this is rather broad brush, but it provides context about how we find ourselves in the place we are now. So post that 2008 great financial crash and prior to 2022, we found ourselves in a low interest rate market environment. And so, I would suggest that central banks and government interventions had skewed markets, through their quantitative easing interventions. And what it meant it meant that people were trading and investing in particular because they were receiving little to no interest in their bank account. And so people were chasing yield in one way or another. That then was basically exacerbated, accelerated by the COVID-19 chapter, shall we say, sort of a few years back, and that actually had a fascinating way in terms of helping to actually surge stock markets. And so many people during that period they did well by simply buying certain particular stocks. So invariably online stocks or tech stocks. They of course were all the rage in that particular time. But the question starts to become, are they still viable trading and investing opportunities for new traders in the environment we find ourselves now, where we have had the battle against inflation and also the kind of changes and moves in terms of administrations in both the UK, the US, and many other Western European nations, and really also how do those markets stack up against foreign exchange markets, FX markets. As I said, today we'll focus mostly on FX markets, stock and equity indexes, but in other sessions we'll look at commodities, fixed income, etc. So, just give you a little bit of a broad brush insight into how these markets operate and what we need to be aware of when we are looking to engage with them. So let's take a little bit of a look between FX and stock markets. So in terms of those markets, what do they bring? What are their pros? What are their cons? What can we look at? Well, in terms of Forex, my view would be that they require a much wider focus, which is where I started, and where funds I traded for were primarily focused on FX, because actually it was very much a big picture, global macro focus, and that kind of suited the way we operated and what we particularly looked to do. Because what we would see is that a currency reflected the aggregated performance of the whole economy. So hence why FX traders are therefore more interested in macroeconomics, which suited me. I know myself, I'm a big picture guy. That's what I particularly like to look at and focus on. And I know from my background and from my experience how I've got to that place. Not only that, is that I've found that certainly FX markets, technical analysis really suited FX traders, especially, as I said, if you're taking sort of macroeconomic swing positions. But you're also interested in just a few bits of data, so unemployment, inflation, GDP, interest rates, and one of the things that some traders found difficult was that in an FX trade, of course, you're effectively taking two trades at once, because each FX trade is about a trading of two currencies against each other. And so sometimes for new traders, that can be perhaps maybe a little bit confusing or a little bit intimidating in terms of trying to get to grips. But with a little bit of practice, a little bit of persistence, it actually becomes quite natural to understand. And as I said, certainly for myself, in understanding the difference between those currencies in terms of their strength and their weakness, that was one of the particular ways that you can look to operate and find an edge in their FX markets. Whereas for those trading stocks, it generally tends to be, for the most part, with the traders I see or work with, it's a narrow focus, looking at a much smaller basket of instruments. So we mentioned earlier, some people look at just focusing on trading, let's say Mag 7, stocks, or the US tech stocks, or one particular sector in themselves. When it comes to stock trading, there is also a deeper interest and commitment to understanding fundamental analysis of that individual stock. So people are interested in understanding things like debt levels, cash flows, earnings guidance, etc. Generally, stocks tend to be about information flow, and in many ways, that is your decisive edge. How good is your information flow? Not only how good is your information flow, but how good is your way and ability to synthesize that information and then turn that into an effective trading plan? One of the other things that sometimes traders do forget, new traders in particular, if they're looking at focusing on stocks, is that stock price rises and falls can also very much be determined by the sector that they're in and the overall index. And so sometimes new traders forget that at their peril, to understand that, even though you might focus on a particular stock, unless it's one of the, particularly big tech stocks, they do have to take into account the overall sector and the overall index. And that is part of what savvy traders will build into their overall trading plan. So FX is very much about wider focus and about looking at macroeconomics. Stocks is very much more of a narrow focus on, a couple of stocks or a small basket of them. And part of that is about understanding who you are as a trader and understanding, which particular style suits you. As I said, I know I'm a big picture guy, okay? I know that, and that, so FX markets have always suited me in that particular sense. Others, they know that they are actually better at focusing, having a narrow focus on a smaller basket of instruments. A couple other of pieces of information that new traders, can be aware of or should be aware of when they're sort of, understanding assets classes and which one to focus on. The FX market is seen as a 24-hour market, as opposed to stock markets, which are time limited. Admittedly, some exchanges have extended trading hours. There are also sort of talks and moves about actually almost moving stock trading to being sort of 24-hour through exchanges, and that I think that might well happen, but I wouldn't understand the kind of the timeline within which that. What that means is that invariably, with FX market acting as a 24-hour market, you're always able to do a trade during the working week, and sometimes on a Sunday for those of us here in the UK and Europe, based upon your geography and based upon the particular timings. When it comes to leverage, well, there are differences between leverage available for stocks and leverage available for trading FX, and also within FX markets, certainly for the kind of, let's say, private retail trader, generally liquidity isn't usually a particular issue, as opposed to stocks, where there will be good liquidity in major stocks, but in some of the very much smaller stocks, perhaps not so much, which means that you generally have sort of wider spreads when trading stocks, as opposed to FX, where these days, as you'll have seen here yourself, that there is a generally tighter spreads in terms of FX markets. And so, you'll see those on the ActivTrades website. FX trading is generally much tighter spreads available. Yes, there is a dealing cost, and yes, there is overnight swaps involved, but it generally means that it is a tighter cost of business generally for those engaged in FX markets over particular stocks. So, as I said earlier, some parts of the year, it can be easy to identify which is the best asset class to trade, which is the one that's either particularly trending or offering better opportunities. As I said, especially if there is a clear trend in your preferred FX or stock instrument. And sometimes it can be very hard to identify that. And, although there is great deals of data out there, sometimes it is just a case of ensuring that you're doing regular, robust market analysis every day, every week, to understand how markets are changing and giving you the opportunity to adapt. What can also help is to understand the overall way markets tend to move and work. And one part of that, what I'm just going to talk about and share with you, is about what we would look at and call seasonality. It would be interesting to know, for those of you here today, how many of you are either aware or actually build in seasonality into your overall trading plans, regardless of what particular instruments or asset classes you like to focus on? Are you aware of that? Is it something that you build into your own overall trading approach? What am I talking about in terms of seasonality? So generally, it's seen as the study of markets in relation to the time of year, which probably is not an immediate shock to people. Now, in the old days, invariably the sort of old trading adage was sell in May and go away, and I think it was then don't return till post St. Widden's Day. I think I could be wrong on the second half of it, but invariably sell in May and go away was widely used in particular in the stock market, because invariably people would expect periods of low volatility over the summer months. Now, I would suggest that the main thrust of that adage is still available, but of course, just the way we operate in markets now and the electronic markets and our ability to access them mean that it's not as simple as clear cut as that. However, what it is possible for us to do is to start to understand that there are clear patterns of seasonality that play a part in markets and actually how you engage them. So what we talk about in terms of seasonality is like to break up seasons in groups and group them into following categories. So we would look at what we term as a low season between May and August, and the high season in trading markets between September and April. And as an experienced trader, it's imperative you kind of learn to identify these types of patterns in advance of trading to help you decide on best asset class, best instrument, best times to trade, and best styles of trading. It's about learning the nuances and patterns of each currency pair or each, whatever asset class you trade to plan trade. And so it helps to keep a log of this information as it can become priceless when trading. It might be said that all trading is about data collection, understanding and collecting data, which will help you shape your trading plan and make better choices and better decisions going forward. And all traders at all levels of your trading journey, that is it's a key part of that. Here is an example from it's a chart of the pound against the US dollar on the daily chart, and just take a moment to have a look at that. I've marked in where the low seasons are, where the high seasons. Remember, the low seasons really between May to August, high season between September to April. Just looking at that chart, for those of you here, can you see a pattern in that? Is there anything that particularly leaps off the chart at you? Is there any kind of recurring patterns or recurring styles that you can see when you look at just a simple daily chart of cable over the last couple of years? In that last example of cable, you may well have noticed that we were trending during the high season and ranging during the low season. Okay, that's what we were seeing there. There you go, and that's what Paul picked up on as well. That we're trending in the high season. So, if you think about this, if this was a currency you were trading, do you think it would be useful to know that kind of information? Do you think that could help shape the way you engage with that particular market? And of course, the answer should be clearly yes. And so, I can't stress enough that regardless of asset class, it does always help to understand the market you're trading before you can successfully implement a trading strategy. And that's one of the things we want to share with you in a position for you to take on board and help develop you as a particular trader. What we can also do is we can actually also take it a little step further, a little step further to help you understand that market and also its place in, let's say, a volatility table. So what we might be able to see, let's bring up the old drawing tool here, is that, in high seasons, which we've just talked about, September to April, what we're also interested in is, when you're looking at instruments that have an active zone, which we'll talk about in a moment, well then, it's no surprise that actually what we see recurring time and time again are, we see positive moves for trends, momentum trading, breakouts, fast moves, as opposed to an instrument that is in its low season and also in its dead zone, where, not unsurprisingly, what we see is that, the opportunity to trade like ranges, to trade false breakouts, fake breaks, fade trades, slow moves. And so, as I said, taking the time to just understand not only the asset class, but the instrument you're engaged with, and understanding, are we in a high season between, September to April, or are we in a low season between May to August? But also understanding the active zones and dead zones. So, for example, even though FX operates in a 24-hour market, if you were trading, let's say, for example, if you were trading fibre, if you were trading euro against the sterling, the active zone, for that is going to be the active zone is going to be a time where both, let's say, the main protagonists, both UK FX traders and European FX traders, when they are both operating, which just so happens to be the London session and the early start of the US session. Trying to trade, let's say, euro sterling in the dead zone, which might be what I would call the overnight Asian Pacific zone, well, then invariably, it is not likely to sort of to move, okay, as fast. It's not likely to trend as well. And so you start to build a plan around, what asset classes you trade, but also what instruments in terms of what is their active zone, what is their dead zone, when is their high season, when is their low season, so that you're in a position to sort of focus on applying the correct trading tactics. Now, some people love to trade trends. Some people love to trade ranges. Part of that is also about knowing and understanding yourself and the way you like to trade and engage with markets. And as I said, one of the only ways to do that is to take your trades and to basically to keep the data and make sure you analyze the data to start to identify trends in your own particular trading style. We will all have our own particular trading style. And one of your jobs, as I said, is collecting the data so you can get very quick understanding of what your particular style is. Okay, you are likely to have the most successful period of your trading when you are trading in a style that is in line with who you are and also your other life commitments. I appreciate that, lots of people here who join us for our sessions, they are trading. Some are trading full time, others are trading, around a day job or around family commitment or, caring for parents, etc. So it's about finding that way to, how can you marry all of this data up so that you're actually in a position to make the most effective use of your time, energy, and resources and the way you trade and engage with markets. So what I can share from my own experience, okay, certainly, as primarily as an FX trader, is that seasonality is they play a part in a currency's volatility, and so it's important to learn to study the currencies if you work in FX, which ones you're particularly trading. So what I always suggest for every trade is take any currency that you intend to trade and separate the seasons like I did in that example with pound against US dollar. Look back for the last 2 years and just start to see, can you see particular patterns there that in front of you on the charts, because that can help you, as I said, start to give you a little bit of insight into identifying when is the exact high season and low season. But also, as you dig into that, when are the particular active zones and the dead zones? Now, of course, admittedly, for FX pairs, that's basically, is easier to understand, okay, based upon the two currencies making up that pair. What I can pass on in terms of ideas and tactics that you can take away is that understanding when you're trading in a low season, you must understand that you can trade trends, but you really do want to be aware of key support and resistance levels on the higher timeframes, as the market is much more likely to falter at those levels during low seasons. Okay. And what you'll also, as we discussed, is that you also recognize that there is a good chance that market will fall into a range. So if you are a trend trader and that's the way you like to operate, then trying to trade in the low season when markets generally tend to range is when you might find it, a challenging period. So either you have to adapt to understanding, what the market, how that market is playing out, or alternatively, that is when you might switch asset classes, or you might switch, the particular instruments, or perhaps maybe even you take a holiday. Well, there is nothing that says you have to trade every single day of the year. But part of it is, as I said, understanding the markets, understanding the particular asset class, and understanding the high season, the low season, and when the active and dead zones are in their particular moves. So on the flip side, from the low season, what we can talk about is, the high season provides longer trends. So especially if you're a trend trader, you can use similar methods, but you're less worried about the general market direction, because trends tend to exert themselves in the high season, and they tend to, as you hear me say every week, good trends tend to leap off the chart. What I would suggest is that it is riskier to trade against the major trend during the high season, as they tend to last longer. And what we generally, as you've seen there yourself, is that one of the key differences between high season and low season is the length of the trend. And not only is the length of the trend, but also it is things like where we would see price falter at support and resistance levels in low season. Those particular support and resistance levels are much more likely to break in a high season when there is a strong trend with momentum. So you just need to be aware of that. And, as always, you need to be aware of possible reversal points during the low season, whereas in the high season, price might consolidate a bit to their levels, but then actually continue. Okay, so as I said, price might rally to a resistance level, but instead of kind of faltering there and reversing, what might happen is you'll see it consolidate and then continue in the same direction. And as I said, this is all useful information to understand as you look to engage in particular asset classes and instruments. What might be an option for you is that, if it's in let's say the low season for FX between, let's say, May and August, well, what might be an opportunity is to look at trading stocks. But in particular, especially for ActivTrades clients, it might be easier to begin by looking at equity indexes, okay, to begin with. Why would that be? Well, there are less instruments to follow, really. What you have are the sort of a major range of global indexes, and invariably what we want to look and focus on in particular are the US indexes to begin with, which we're going to look at in a moment. But there are also available equity indexes that there is great research out there, and there's also great analysis that you can tap into. And also what becomes more important is that you've got very good trading conditions with the equity indexes. They are liquid, they are relatively cheap, and they have volatility in the sense of that even during the kind of low season for FX, there will be volatility within equity indexes that you can utilize for your own trading strategies. And of course, what we have here with ActivTrades is there a really broad range of global equity indexes, not just the major American ones, but also major European, major Asian, even South American ones. So you have the opportunity to basically as I said, in FX low season might be an opportunity for you to have a look at equity indexes as a possible other asset class to add to your particular style. But equally, for those of you who already, I think was it Mike Paul who said he'd like to trade NASDAQ. There is the opportunity when there is, let's say, low season or periods of quiet in equity indexes, to look at the particular FX asset class, okay, the opportunity to do that. And as I said, in a future session, we'll look at what would happen if we added in commodities, fixed income, etc., that are available to trade with ActivTrades, so that you get a broader picture of all the many different asset classes and the different instruments that you can access. So before we switch across and have a look at the live markets, just in conclusion, remember, Monday Market Matters is here to support you in your trading journeys in 2025. Every Monday, 2:00 London time, we'll always take a look at the news, the education, and also have a look at ActivTrades tools and markets. I said this at the start of last year, and I say it for this year, it is going to be an interesting year in markets. We've already seen that. So I hope that you will join us to enjoy that journey. So remember what we talked about. There are times of the year when it is perhaps more sensible to focus on either the FX or the stock market. Sometimes it's abundantly clear, okay? Sometimes there are periods where it's abundantly clear, both on the chart and also in terms of the media focus, and other times it's not. Generally, as a rule of thumb, stocks generally require a narrower focus on just a few instruments, where FX requires a wider macroeconomic focus in terms of understanding them. It is helpful to use historic seasonality patterns to give you an edge in your market analysis. Every currency does act a little differently, so you want to be aware of your chosen market's behavior. And what you can do is you can learn to observe and learn from historical moves as they often repeat. As we said, we saw trends in the high season very often range bound in the low season. Choosing which one to focus on, part of it will be based upon your experience, your lifestyle, and your own particular goals. And so, that is a very much an individual consideration based upon, as I said, your experience, your lifestyle, your goals, and also your risk sentiment as well, which is a topic for another day. But with that in mind, why don't we check them out on live markets and have a look at how the markets are starting out for this week ahead for us. Just a reminder, we will not be here next week. Monday Market Matters returns in 2 weeks, Monday the 24th of February. And what we're going to talk about in terms of the education piece, and that is about just simple risk management, okay? As you heard me say at the start of this session, we were into rather eventful and volatile times, and so it is really crucial that traders have an understanding of risk management, how to apply that in their own trading. So that will be in 2 weeks today. You can register on the ActivTrades website, or you can look at the QR code there, which will take you to that page to be able to sign. And I hope to see you there. And as always, you can follow ActivTrades on YouTube. Go onto YouTube, search for ActivTrades. Make sure that you subscribe and like. You'll find that the recordings of most of the Monday Market Matters webinars will find themselves there, as well as on the webinar archive page on the ActivTrades website. So by all means, please subscribe and like and follow. And as I said, you'll also be sent the recordings of these particular sessions. I appreciate that when you're at the start of your trading journey, sometimes it helps to watch a video a couple of times just for it to help sink in for you. Okay, so let's switch across to the live markets and see how they have opened up. And as always, I hope you found that helpful. That's given you a little bit of insight, a little bit of education that you can use. As always, if you want to get in touch with us, you can see the contact details there. You're very welcome to email englishdesk@activetrades.com. Maybe you've got some comments, maybe you've got some thoughts or feedback. Maybe there are topics you'd like to see me cover in future sessions. Well, by all means, you can send that there, and we'll very happily take that board and try and build that into our program going forward. So, as I said, if you just bear with us for a moment, I'm just going to switch across to the charts, okay? So just bear with us a moment and we will pull up the charts. Hopefully, you can still hear my voice. Hopefully, you can see the charts now. So, of course, today with ActivTrades, you have the opportunity in terms of charting platforms. You have access to ActivTrader, TradingView, MT5 and MT4. Today, we're just using the MT4 because it's easy for me to show you lots of charts at the same time, because I just wanted to give you an idea of what we have seen. So what I have here, and just bring up my pen here, what I've got here is I've got a profile set up for predominantly indices and a few commodities. So I have here, this is the Dow, NASDAQ, S&P 500, the Russell, and then FTSE, Nikkei, DAX, and West Texas Oil, okay? So they are all set on the hourly chart. And the reason is because I just wanted to use it as an opportunity to show what we have been dealing with over the last couple of days. So this on the Dow, this was Friday afternoon, okay, as the same as we saw on NASDAQ, as the same as for S&P 500, as the same as we saw on Russell. And this was after the NFP data, but also as we started to get rumours of these, let's say, the next round of Trump tariffs. For those of you who joined us last week, and those of you who saw the first iteration of the sort of Trump tariff trade wars, what we saw was pretty similar in terms of Sunday night for us here in UK and Europe, but the sort of the open of the Asia Pacific markets. Markets gapped down. You can see that markets gapped down on their opens, even here on the Nikkei. But actually, very quickly, we saw the gaps fill. Very quickly, we saw those gaps fill. Okay, bosh, all like that. Okay, even on Nikkei, etc. And my view would be that it's almost like the markets. Okay, markets participants are seeing Mr. Trump's tariff calls and his trade wars. It's almost like he's crying wolf, okay, and so people are not expecting him to follow through in them. They've seen that he uses it almost like as a stick to beat people to the negotiating table, and that's what he's very good at. He's very good at negotiating, okay, and that's what we saw last week. Even though we had the initial quite strong strident moves in markets, within about 24 to 48 hours, markets had kind of almost got back to where they were as we saw the sort of, let's say, the political shenanigans play out. And I think that's what we're seeing here as well with the markets here as well. Paul says you're at the trade show on the 28th. It's possible, Paul. It is possible. I will keep you posted. I'll keep you posted on that. But what we're seeing there is, as I said, these kind of markets here. That's what we're expecting, and what we can see is that over the Asian session and the London session, We had a little bit of bullishness. Now it might be changing, of course, as those markets open. We're going to look at that in a particular moment. Interestingly, even though there was lots of talk about the Mr. Trump coming for the EU in terms of tariffs, that doesn't seem to have put any kind of slowdown on the DAX there this morning, or even the FTSE. In the FTSE here, we had gap open, and then you can see we've been strongly moving in that sense as well. And as I said, we're in eventful times. There's lots of commentary going on, which is why you want to be on top of the news. You want to be on top of your risk management, but also recognize you have to see how does the market react to this information. Okay, markets will change, and you want to understand how that will play out. So, lots there now. Whilst that kind of volatility we've seen there is in equity indexes, it might be said that perhaps the biggest winner of that has been some of the commodities, and in particular gold. Here we go. This is gold on the weekly chart. Now, that has really, for the last 18 months, been just in a fabulous bull trend. What I always say to new traders is that invariably, markets don't trend as often as we would like. They only tend to trend 20 to 30% of the time. The vast majority of the time, they are range bound, and there are ways to operate within that. But when a market's in a good trend should leap off the chart at you. Okay, you don't need to force it. If you are forcing it, you're probably it's probably not a trend. But that's the weekly chart that has been in a fantastic trend. Towards the end of last year, those of you who joined us, we were looking at were we forming a kind of like a lower high here, but actually you can see this is the 20-period moving average. The 20-period moving average was acting as dynamic support. We couldn't get through it. We couldn't break it. We were actually just forming a triangle, okay, a triangle, symmetrical triangle, which is a continuation pattern, and it's fair to say that we have most definitely continued there, certainly on that weekly chart. And if I go down a little bit lower on the, let's just clear these off, and we'll go a little bit lower on the time frames. Certainly, when we go down to the lower charts, okay, we look at the bang. Let's have a look at the. Bring up the daily chart. Yeah, here we go. The daily chart. You can see there for yourselves that, once again, that has just been a fantastic trend on the daily chart, really since the start of the year. Look at that first day of the year, lots of bullish buying, and really it's never looked back, has it? And as I said, good trends leap off the chart, and good trends when you're starting to understand higher highs, higher lows, okay, understanding market structure, which I think is one of the sessions we'll be doing in the future as well. That can be just a very simple, effective way to engage with markets and also to follow good trends. But as I said, you can see today has been very bullish, and that's the way markets have been responding and reacting to the sort of Trump news. Let's go down to the hourly chart here. Yeah, bosh. Okay, you can hopefully you can see here. We gapped out, but within an hour we'd already filled any particular gap, okay, and we're strongly above the moving averages, and you can see price has gone and it rallied its way up to 2,900, big number there, okay. Just you can see the big 2,900 number, and already, even though we kind of looked like we might have pinned it, like might have false breakout, but actually what we're seeing is that as the American market is opened, that has just continued that strength there, and that is a reflection of people's uncertainty. Even though they think Mr. Trump's probably crying wolf, it is bringing uncertainty into markets, and that, along with other factors, has just basically continued to demonstrate that demand for gold, that absolutely demand for gold, and that is reflected in a very strong trend that we've seen over the last 18 months, almost 18 months, 2 years. Whilst we're at that, let's have a little look at whilst we're here, we can also have a look at, because I appreciate we've looked at the sort of the indexes, but also commodities. We're going to switch to the FX and then to the how the American markets have opened today. But even silver, okay, this is the silver weekly chart. We can look at how, let's just bring up this, how we had provided a double bottom here at the end of last year, sat on the 50, but really this year we have just continued to sort of push our way north, to sort of drive our way north with that. And if I look at the daily chart here, we had, this is the daily chart, and we can see that double bottom was there, and then invariably we got above the 30 big round number. And it was grinded for the first couple of weeks, but we can see that invariably, maybe not as strong and as long a trend as gold, but it certainly has been a kind of bullish from where we opened the first day of the year. We seem to have continued with that. Okay, so with that in mind, let's have a little look at what we're going to look at. Let's have a little look at the dollar, as always. Okay, how that is starting the week. How's that responding to the Trump tariffs? And then we'll have a little look at the in particular the kind of US indexes on the open. That's what we want to see. Yeah, so we can have a little look at that because, but we talk about FX and stock markets and equity indexes. So let's have a little look at the FX market. So even asset classes FX, you'll hear me talk about how what we particularly like to see is that even though, for example, for me, most of my FX trading is on sterling, that's what I've always focused on. And what we also want to be able to see and understand is that if you're trading FX markets, you want to have a look at the US dollar. Okay, the US dollar is it's the big daddy of those FX markets. Okay, it's the reserve currency of the world. It is still, regardless of people's commentary, it is still what we're seeing now. But clearly, I've got quite a lot of packages, indicator packages and stuff going on at the moment. But for new traders, understanding the dollar index, understanding those dollar majors, that can be a great starting point for your FX markets. I'm surprised why it's taking a little bit slow there this moment. There we go. That's it. So this is a profile I have for the US dollar, Aussie, Euro, pound against dollar, dollar Swiss, Kiwi dollar, dollar Canadian, dollar yen, and then the dollar index. So, the reason I have that is so I can have a quick snapshot. So, for example, on the weekly charts, really, that has been Aussie weakness, dollar strength. Kiwi, that has been Kiwi weakness, dollar strength. Euro, that has been Euro weakness, dollar strength. Cable, pound weakness, dollar strength. Dollar Swiss franc that's basically dollar strength, Swiss franc weakness. Dollar Canadian, that has been dollar strength, Canadian weakness. Dollar yen has been a little bit more mixed, which we might look at in a moment. But one of the reasons I have these charts set up like this is that I can take a very quick snapshot of what's going on, and that helps me. Quick snapshot. Remember what I said. FX is all about the big picture, wider focus, global macroeconomics. I want to take a quick snapshot, and then I can drill in to look at how I want to operate in those particular markets and which ones I particularly want to focus on for my own trading. But let's have a quick look at dollar index. Weekly chart here. You can see from the start of Q4, calendar Q4, just a fabulous trend on dollar index. Then at the start of this year, we tapped 110, put in an indecision candle, rolled off it, pushed up, gapped up, fell down, and then, we've worked away. And as I said, here we go. If I look in the daily chart, just a great trend. It has been in a great trend. We hit the big round number of 110. It's always important, draw them in. We put in this is an evening star formation, rolled away, rolled up, gapped up, because Mr. Trump's first comments on putting tariffs is basically, tariffs were good for the dollar, but as those tariffs got rolled back or delayed, then we saw the dollar fall. Now we've started up this, if you look at this week, there's been a little bit of a gap up there in the dollar index, which means if the dollar is strong, the majority of the other majors will be weak, perhaps apart from the yen. We've gapped up there, but actually you can see that, it's, as I said, it's not been anywhere near as big a move as we saw last week. If you look at that last week, that was quite something, right? We finished the week, and then here we go. I should bring up the pen here. We finished the week and then we gapped up, all right, gapped up massively. But then, as I said, as soon as those tariffs got rolled back, you can see how that affected the dollar. But this week, the gap is much smaller, right? And actually the movement has been much more constrained, hasn't it? As I said, I think people are getting to the view that Mr. Trump is crying wolf when it comes to tariffs. And that's what's impacting the market reaction there. So we have that there going on. If we've got a little bit of time, why don't we have a quick look? I'll see how it is. Seems that my internet seems a little bit slow at the moment. Okay, clearly maybe there's every man and his dog is excited about markets and what's going on with them there. But as I was saying, for those of you at the start of your trading journey, you can have a look at focusing on FX, look at focusing on the dollar index and the dollar majors as a good start, because you've got great liquidity, okay, you've got great spreads, okay, you're on active trades, and there's enough volatility going on to give you something to work with. Now, it's interesting. Let me just have a little look at here. I'm going to put our charts here. This is a different profile that I have here. Is that that's my VIX. Okay. All right. So here, just very quick for the last minute or so. Bang. So I've got a 30-minute chart on the Dow, 30-minute chart on NASDAQ, 30-minute chart on S&P, 30-minute chart on the Russell. I'm always intrigued to sort of see, where we are. Okay, you can see, the Asian session, the London session, Asian session, London session, Asian session, London session. Let me just update that one a bit better. But you can see that how that has basically responded. Okay, in terms of the charts, there, the same thing. So, but what we can also see is that basically the opening of the US session here. I'm going to go down to the first 15 minutes on these charts. The internet seems to have slowed down a little bit. Apologise for that. But what we can see is that's the opening of the here we go. That's the opening of the Dow. Okay, we've got here the opening of the Russell, and here we'll the opening of the S&P as well. There we go. So what I normally say to traders is I normally give the first 15 minutes of the session a miss. I just watch it because you can see how much volatility is involved, especially on a Monday, especially on a Monday after Mr. Trump has been firing off tariff wars, okay, tariffs for trade wars over a weekend. That's why it's volatile. I'll just let it play out for the first 15 minutes at least, and then see how the market reacts. You can see there's a really very big strident reaction there, especially on the sort of the Dow there. And now I'll be watching as we go into this next hour, see how that plays out and what, if any, opportunity that offers for us. Okay, ladies and gentlemen, unfortunately we have run out of time. Time flies when you're having fun, as they say. I hope that you have found that useful. I hope that's given you a bit of insight into asset classes, but also just understanding FX, stocks, and equity indexes. As always, I wish you the very best of success in your own trading endeavors this week. Remember, there's a lot going on, so make sure you're always managing risk. I hope that you'll join us in 2 weeks. Remember, we are back in 2 weeks to look at simple risk management. Until that time, have a great couple of weeks, okay, trading, and I will speak to you then. Trade well, everybody, and we'll speak to you soon. Take care.